We got plenty of time. I know it's tough to think that we actually might have a trade right away in the first 5 minutes of the day. But hey, that's okay. We can wait if we didn't get them, and we'll see what the next opportunity brings. Welcome to some of the new folks that are here. We are trading. This is a trading room where we are trading mini S&Ps. We have this group of people here that I host versus a open quorum, like some people want to think that Zoom is. It's not what it is. This is like a trading room where we discuss trades and throw some ideas at each other, and hopefully we can make some money trading futures. We trade every day here, and we used to be on the Florida exchange, but because of COVID and all the ramifications around it, and obviously you can't do it when COVID's around. So you turn your mic off if you can hear me. Anyway, so with all the stuff with COVID, it's hard to get be on the floor as they would like it, or we would like it to be, but it is what it is, so no big deal. So we're here from my cozy basement on my floor, but we're trading S&Ps. We're trying to take advantage of ebbs and flows of the market. We don't believe markets go straight up or straight down. Whoa, what happened there? I don't know, but that was okay. I'll definitely take that. That's for sure. Okay. All right. When markets don't go straight up or straight down, so we're trying to find those inflection points to give us an opportunity to scalp the market. And we're looking for about 2 to 3 points on our trades with the likewise amount of stops. All right. That's what we're looking for here. And if you did hit the 46 here, you can pay it off. You had to get in a little better than 46, only because I was talking. So hopefully you got in a little bit better than 46, and nice little quick break here to start the morning. If you took the trade, like I said, if you didn't take it because we came in late, I'm sorry. I had technical issues on my side. So, all right. So that's where we're at. And again, if anybody has any questions, please feel free to ask. Put them in the chat box area. If you look at the chat box area, the levels that I just gave out are going to be imprinted in there as we quickly rotate back down here to our, kind of in a little bit of an upper range here this morning. Again, if you have any questions, feel free to ask. Sorry, we're gotta get back into our normal mode here. Sorry, we're running a little late, so I'm trying to catch up here quickly. All right, so if you did manage to maybe jump in here, maybe a little bit better than 48, you got a nice rotation off of it, and hopefully you were able to, if you did get in, should have got in better than 48, only because I was talking when we were up there. Well, if you didn't take it, like I said, that's all right. We'll wait, and we'll see what the next opportunity brings us. The market continues to have its rotation to the upside here. Every now and then you get a little bit of a break. Yesterday in the afternoon, this is how fickle-minded this market is, because I guess that coin-based stock was IPO'd yesterday. And it was like euphoric at the beginning, and then all of a sudden, everybody who was euphoric decided, "Hey, let's take some profits here," and that stock started, downticking or going down, and that was the reason they said our market went down, is because there was a correlation between that and. This is what the market is. It just needs any reason to kind of sell off a little bit because it's so high. Everybody wants to take some profits along the way, but that's where it's at, and then it just came right back overnight. So not much really to concern yourself with. And we did have a lot of Fed speaks, and it was not when Powell was talking when they had that little break. So we did have initial claims that came out this morning. You can see after the number, it was pretty decent. Retail sales also came out, again, pretty decent. So now we have business inventories coming out here at 9 o'clock at the top of the hour, and also National Association of Home Builders Index. It's also coming out here at 9 o'clock. So a couple numbers, top of the hour, maybe some possibility of some market reaction to it. There are some Fed speaks later on this afternoon at 1 o'clock and at 3 o'clock after the market close. So 1 o'clock, there's somebody yakking away. Well, actually, there's also one at 10:30. But who knows? Just putting it out there so that you can be aware in case you're trading around then and something happens. You might think or know why, and that's a possibility. So that's where we're at as far as, so we have a couple numbers coming out here at top of the hour. Business inventories and National Association of Home Builders Market Index. Obviously, the market index housing index could be a little bit of a market mover. We'll see. All right. Okay, so that's where we're at. Trying to catch up here really quick. Sorry about jumping in here a little late, but sometimes can't get good help around here anymore. I'll tell you that much. So let's see what happens going forward. So we had one quick trade. Surprise, surprise. Yesterday it took a while to get a trade. But hey, it's okay. What are you going to do? It does happen. And but today we had a quick one off the morning. Maybe partook. And we'll see what happens next. So we do have a couple numbers, like I said. Let's see. The Commerce Department will release March retail sales this morning. Let's see if I can figure out what the number was here before we continue. What's the VIX? The VIX got to be solidly in the 16, maybe even closer to 15 now. Handle, but should be 16. Yeah, 1658. So we're solidly in the 16s now. We're waiting for the next push up to get to the 15s, which it seems like these days we're going to get. But that just tells you, as a trader, that you have to be very, very cautious and patient, and wait for the opportunity for the market to create. Give you an opportunity to trade. Don't go trying to make something up. That's not what we're here to do. Peter, are you in the room right now? Hey, don't, Peter. I scheduled a class for today, so I don't know if you're, going to be around or not. But we got a class scheduled for later today. Usual time, 12 o'clock. No problem. I'm just telling you we scheduled one. So in case you can make it, you can make it. If not, it's all right. We'll wait till your schedule clears up a little bit. And we'll see what happens. All right. So the retail sales went up 9.8%. Well, their expectations were for 4.8%. And that's why we're up here at new highs here. There was 8% growth in sales, ex autos and gas. So that was all good. Initial claims also came better than expected, and it was down to 576. So that was a very nice new low number. And that's why we are up here pushing new highs. As you can tell, the market actually is reacting to fundamental news. Surprise, surprise. But both those numbers were better than expected. So good for it. We'll see where the day goes now. So that's why the market's up here. The numbers were much better than expected. And but again, I think overall the market is kind of expecting these expectations, and market is not letting them down. So that's a good thing. All right. Okay, if anybody has any questions, the chat box area is where you want to put them in. As the market kind of hanging here. Oh, yeah, busy for literally 5 minutes, and they pull the plug. Okay, let's see what happens now. Again, the numbers at the top of the hour here. I'll see what they are going to present. So, Commerce Department, we're looking for a strong rebound with sales rising 5.9. We got a blowout number there, 8-point-some%. Can we repeat the levels in the chat box area, please? And there they are for you. Again, those are levels we use as a guide for the day. You can add to them, subtract with them, do whatever, but we are just a guide. Doesn't mean that everything's etched in stone. We make adjustments to them. It's just like a guide to our day. As we dip a little down here to our blue band, getting a little bit of rotation off of that, in case you think I wasn't watching. Commerce Department released its numbers this morning, compared with a drop of 3% in February. Core retail sales was also up. Everything was up. Those numbers are really good. If sales rise as anticipated, that would be a good indication that the last round of $1,400 direct checks are making their way into the economy, providing a stimulus intended by the White House. A miss may indicate that the money is being channeled to other avenues, such as savings or asset purchases. The New York Fed said last week 42 cents of every stimulus dollar is being saved, while 25% of the funds are being spent and the rest is being used to pay down debt. It's nice that they have it all figured out for you. It's amazing, right? Reflation trade for the stock market, a strong retail sales number could kickstart the reflation trade that favors cyclicals, which has lost steam as of late. Despite a number of market moving events, S&Ps have struggled to gain traction in either direction, as it is down a little bit this week, but obviously it's not down anymore. Reflation trade has been taking a spring break, said some wealth manager. We believe investors continue to position themselves for reflation as the vaccinations roll out and the economy recovers. All right. The economy is accelerating, but still moderate. The Fed's beige book yesterday said the United States economy accelerating at a moderate pace, while some of the sectors hit hardest by the pandemic are showing signs of recovery. Bonds actually, look at the bondos, 158 handle. No surprise. There you go. For all these like fancy economists that think that inflation and interest rates have to go up, look what's happening. Interest rates are going down, even though we had these really blowout numbers. So you try to figure this market out. It doesn't matter. It doesn't make sense. Back to the beige book, the reports on tourism were more upbeat, bolstered by the pickup in demand for leisurely activities and travel, which contacts attributed to spring break and easy pandemic-related restrictions, increased vaccinations, and recent stimulus payments among other factors. So that was a very good beige book that came out yesterday, but really didn't do much for, well, it kind of rallied it a little bit off of that. Do you believe they broke it because of that Coinbase stock? I mean, that's crazy, but I mean, those people who, well, whatever. Moreover, the latest Fed Beige Book reports continues to show employers' challenge of pulling workers back into the labor force, and that will take time as vaccines roll out and childcare becomes more accessible. Factories are that are out of Chair Powell's control. Factors that are out of Chair Powell's control, and that's why he and the Fed continue to signal holding near interest rates near zero through at least 2022. To let the economy run hot enough to achieve their dual mandate. All right, we're just kind of hanging here around our blue band. We have a couple numbers coming out here in about 11 minutes, so we'll see if that creates something for us to trade or not. Next level on the upside, we have as resistance is up at the 52 area. Probably next good support we have would be right around 35. So got a few areas of support right layered on top of each other on the downside, only because that's where the market has been lately. We'll see. Lucid Motors says its new electric vehicle is ready for the cold stuff. Lucid, and by the way, they have a nice car. I don't know if you saw that, but it is definitely a nice. These electric cars are looking really good. Lucid Motors, LUCID, updates on the cold weather test runs on the Lucid Air at minus 40 degrees Celsius. I don't know if that's cold enough for Chicago. Honestly, I don't think that's cold enough for Chicago. What is that in Fahrenheit? 40 degrees Celsius minus. Anybody can figure that out for me? This is not. It's not cold enough for Chicago. We get minus 25 degrees Fahrenheit here in Chicago. I don't know, 40 degrees Celsius, minus 40 degrees Celsius is, it's more than that? Okay, I believe you. All right, that's good. It's good. At least it can handle some Chicago weather. I mean, it could get nasty cold. I mean, let's not send it up to Alaska or anything like that. That's insane numbers. Lucid Air hit all its cold weather testing targets, from quickly warming up to starting to charging and more. Despite cold weather, the quickness of the cabin was notable. Typically, interior components of the vehicle get noisier as the temperature drops. Not Lucid Air, no siree. Its noise variation, vibration, and harshness rating tested exceptionally well. And for luxury vehicle owners, that's crucial outcome. Yeah, it is. That is a nice car. I saw a couple pictures of it. I don't know if they're out in production or not, but it's a really nice looking car. All right. Let's see. This is a number, not doing anything. We bounced off of our blue band here. If you are a blue bander. So we have business inventories and National Association of Home Builders index coming out. Both of those will be up here in about 7 minutes or so. And we'll see what it wants to do from there. We had 2 good numbers come out this morning. Both of them above expectations, good for the economy. So that was one reason why we're up here. Up here meaning all-time new highs. Okay, we're just kind of range bound here. We'll see if this number can inject some volatility. Patience, I keep saying this over the last week or 2 now, because we're trading at these all-time highs is very important. But we have been successful. We haven't had many opportunities, but the ones we've had have been fruitful. Fruitful means you should have made money on them. I think that's what fruitful means, at least in our conversation. Good morning there, Gervin. Do you need the levels? Can we print the levels? Here are the levels for you. I'm 1 step ahead of you there, Gervin. Yes, that's a good question. If once you learn how to find levels in the S&Ps, could you relate them to other markets as well? And the question is absolutely. The education part of our service here is not only for S&Ps, it's technically based. So these concepts and ideas that we use here should be applied. It could be applied to other markets as well. The concepts and ideas do work there, and NASDAQ. They probably work at really any market. You just have to find some markets, though, trade more on, like the Forex trades more with banking intervention and more one-way trade, and especially when they get, a belief or a whole bunch of them decide to do the same thing at the same time, and you really don't have a chance. Sometimes that happens in the Forex market only because it's run by the banks and governments, right? But I think I think you can relate it to grains. You can take it to the oil market, NASDAQ for sure. I think it works pretty well there. So yeah, you could definitely you said, what is reliability levels on the NASDAQ? I don't know, only because I don't have the NASDAQ up and I don't trade it. My belief is that you got to focus in on one market and be good at it, understand what affects it. Like in this situation, we have a couple numbers that are kind of come out here at the top of the hour in about a couple minutes. So There's if you trade the grain market, you have to be aware of grain reports, and you have to know when they're going to be released, so on and so forth. So I know there's a correlation, a close correlation sometimes between the Nasdaq and the S&Ps, and that's why I would probably have to assume that you could probably use the Nasdaq, our way of finding levels in the Nasdaq as well. But I will say that the Nasdaq over the last, did break much more rapidly than we did, and at a bigger extent than we did. So there are sometimes a disconnect between Nasdaq and the S&Ps for obvious reasons. The easiest one is the fact that the Nasdaq is very highly tech centered. So when the market, we were rallying, the Nasdaq was breaking. So you have to take that into consideration. If you're going to mirror or try to mirror one market against the other, sometimes it's not going to work. And that's why also we try not to even do that here. We try to just keep trading the market that we're following, because that way we don't have to, concerned about that situation, about one market. You're looking at the Nasdaq, they're breaking, and you're thinking, okay, well, we should be buying, we should be buying the S&Ps or selling the S&Ps, and that wasn't the case. So sometimes that happens, So you have to keep that in mind. But again, the concepts and idea and technical analysis should work in either market. All right, if you did dip your toe here against the 41 pivot, maybe you got in and getting a little bit of rotation against it. Obviously, we didn't get to 41, but if you scaled in, maybe you were able to get in a little bit here against the first rotation back to our pivot, as we got a number in a minute here. So keep that in mind, but at least you got a nice little pop here against our rotation there. All right, that's another one of our we had a blue band rotation. Now we have a pivot rotation. So we're getting a nice little, these little things that occur, that happen. Anything that I say, by the way, is taught. If I say something like we're getting a rotation here off of, hopefully our traders who have taken our course do understand and are probably looking for that, and some of them will take it, and some of them will not. This is a very important thing here, is we always focus on each individual's risk tolerances, not mine or not anybody else's. Everybody trades differently. And if I take a trade, maybe you won't, or maybe you'll take a trade, maybe I won't. So, all right, we have this number coming out here. Let's see what it wants to do, if it does anything. Okay, we have this number coming out here. Let's do something. Okay, the number is coming out. No, do something, market. Oh, there we go. Whew. Catch that? No. Well, there it goes. Thought we were going to get really excited and number is going to do something for us. It's not doing anything for us. Happens. Okay, but again, next support level on the downside we have is down to 35. Well, we're just going to hold our pivot there. Let's hope we get a little bit of some movement. Welcome to some of the new folks that are just joining us. If you look at the chat box area, we're going to have the levels that we gave out at the beginning of the day here. There they are. We use those as a guide. We had our first rotation against our 46 level. Their resistance level worked out very nicely for us. We had a couple of price action opportunities that worked for us. So considering it's lately we haven't been getting that many trades, so we gotten a few extra little bonus trades this morning. We like to average 4 to 5 trades during the course of a trading day. I think an average is about right. I think we probably over the long run average probably more than that. Lately, I keep saying this because I don't want you to get discouraged. Lately, we've been, not getting 4 or 5 trades in the course of a day, but again, it's okay. We get it. So again, you had a couple good numbers came out this morning that beat expectations. Retail sales, they're expecting 4.8, came out at 9.8. So that was a big miss. And the jobless claims number, initial claims number, they were, came down to 576, which is probably one of the lowest numbers it's seen in a while. So that was also two good news items fundamental news items that created this new continuation rally here. Stock futures like these numbers as associated with good news on economic fundamentals is being accompanied by a dip in the yields in the bond market. How do you like that? Totally, you would not think that this is why we live in a weird world, right? You would think that these good numbers would increase fears of inflation. And that's why the reason we broke, I don't know, about a month ago. And now we have confirmation. And the bond market's rallying. Totally makes sense. Not. That's why we don't trade numbers. That's why we don't try to figure out where we're going next. Because as soon as you try to figure it out, they just do this to you. So our goal here is to trade every day with an open mind, not to have any kind of bias as to which way the market's going. Keeps us out of trouble. Just trade what the market is giving you or not. Trade every day with an open mind. Obviously, there's going to be some days where the market is going to, just continue one way. It's not our best trade for us, but we can take advantage of those opportunities when they occur. We just never know. You never know how the market's going to turn out day to day. And as soon as you have it figured out, okay, I'm going to say this. Everybody tell me who said this. As soon as you have it figured out, the blue band gets in the way. That's somebody just wrote me that. Can anybody figure out who sent me that? That's right. You got it. That's right. Don just cannot stand that blue band. Yesterday, he was a very patient man. Said it took him an hour and 10 minutes before he finally got his target once it got through the blue band. An hour and 10 minutes. The man's got patience. That's what happens when you live in Texas. You got this big, 1,000-acre farm situation. I mean, to drive around your acreage got to be hours and hours. So you do have patience. And he's also a very stubborn guy because he will not accept the fact that the blue band works, especially when his targets are above or below it. Just won't do it. Just won't do it. Mm. Yeah, he could go fishing while waiting for his numbers to get filled. He could do that probably, or maybe just hop on the helicopter and loop around his estate and come back. Something exciting like that. I mean, fishing kind of boring, but you know, he probably likes fishing. All right, we are kind of. Oh, he's done for the day. Look at him. Sorry we kept you so late. It's only 9:07 today. Sorry about that. Yesterday we kept him past 10 o'clock. But he's understanding how slow it is, and doing what he has to do, make a little bit of money, and saying, "Okay, I'll see you tomorrow." See, he's been a busy guy. He says he's taken 9 trades today already. Not since I started. Maybe taken 2 or 3 when I started, but maybe he was up early this morning. All right, so we're just kind of range bound here. What a surprise, huh? All right, so we are just kind of range bounding here a little bit. Kind of retest this pivot area, but I mean, yeah, the pivot, but I'd look for 35 now as our next support area. All right, we are just kind of range bound. Anybody have any questions? If you want to ask a question, please put them in the chat box area. Yeah, the levels are good throughout the day. And some will even say that they're good, like the faraway levels can get triggered overnight, the distant levels. Now, you could write areas and levels from day to day, keep them on if you're going to trade at night, and use the levels that are not close to the market. Those seem to work pretty well. I don't trade at night, but some of our traders trade at night, and they tell me that some of our faraway levels. Now, during the day, I would say yes. You can use especially in the late afternoon. Now, again, the late afternoon trade is very difficult. It's all one way, a lot of it, and you also don't want to get involved in a late afternoon trade. I'm talking between 1:30 and 3. It could get really choppy. It's very thin. It goes one way a lot of times, and so I wouldn't trade it in the late afternoon unless it's even the faraway levels I don't like. But once the trade gets the less volume and less and some goofiness, you can probably trade any of those levels overnight the faraway levels. But then you have to keep bigger stops because you can't keep a tight stop if you're trading at night. I don't bother with trading at night because I do appreciate sleep. It's a good concept. And if I had a position on, I'd probably be looking at my screen all night, and I don't want to do that. So I'll just wait till the morning. But that's me. Doesn't mean that, like I said, everybody's different here, right? Everybody's different. So this Coinbase stock took a beating yesterday. Opened at the highs and completely sold off like a whole bunch. Let's see if I can find the prices here. Well, it got up to 400 and some. Oh my goodness, it went down to 300. Wow, 400. It was above 420 and went all the way down to 300. That's crazy. But that break was supposedly why we broke. That broke in that coin stock. Broke us as far as S&P's in the right around 1 o'clock. Not all the time, Matt. We obviously are counter trending, but we also have a buying. We had a buy opportunity at the 41 level here. So that is not a counter trend. If you're looking the market to continue to go up, we're just looking for good entry points to get in. And we need reasons to trade. We layer a whole bunch of multiple reasons to why you should be looking for trades and what trades you should be doing. And every time you're trying to find a trade, we need a reason for it. We do have opportunities where we have momentum trades, but the market has to set itself up for it. And so not 100% counter trend, but we're also, scalping it. We're not looking for a reversion back to the mean. So not completely true, but it's a combination of a lot of things. What do they have to do with each other? What does what have to do with each other? Coin and S&Ps. Well, I didn't know that they had anything to do with each other until yesterday, when the break in coin created us this move here at around I want to say about 1 o'clock. Created this little push here to the downside in the S&Ps. So I didn't think there was a correlation, but yesterday's break in the middle of the day in the S&Ps was correlated to the coin break in the Dow. I mean, that's what they related. It was they were breaking at the same time, and the only news that was coming out at that moment was the fact that coin was breaking from 420 to 300 and some. Like I said, they needed any reason to sell the market, and they got it. They attributed, but then once it stopped, you can see how the market kind of rotated back. It was like it was one of those jump on board. Everybody's selling it. Then when they realized that it was stupid, they kind of rallied it back very strongly. It was a nice rotation there off of those. I don't remember where it stopped, but yeah, they shouldn't have anything to do with each other, but they did. At least yesterday for about an hour or so. And I didn't make that up. I'm just telling you what the chitter chatter was, because nobody could figure out any other reason the market was breaking at that time. All right, next level of resistance we have is up at the 52 area. We got up here to 49, rotating back down. A little bit of a buy there against our pivot there at 41. If you were so inclined, if you wanted to jump in and get long, it was a nice little buy there for you, and it had a good reason. You had our blue band as well, and you had the pivot as well. So if you wanted to get long, or if you were thinking that the market might rotate and push to new highs, that was where you could have gotten long there a little bit. Again, everybody trades differently here. Some are scalping, some are position trading. Whatever it is, the only reason we need you to have reasons to trade, and we filter in a lot of reasons, whatever trader you are or whatever trader you might want to be, into giving you reasons to enter trades and exit trades. All right, so we have no other economic reports today, and so we'll see what the day brings. It's definitely reacting to the good fundamental news that was out from the retail sales number, and this might even be a bond-related rally, right? Right now, bonds are up at highs. We're up at new highs. You never know. Could be a bond-related rally. We were breaking with the bond market, I don't know, about 3-4 weeks ago, and now we are rallying with the bond market. Totally doesn't make sense. I'm just pointing it out. I'm not trying to make sense of it. Just saying. All right, we continue to rally. Again, trying to find entry. If you wanted to get along, we talked about where. Right now, support would be back around the 46 area, 45, 46 area. No, it's not actually. It's kind of annoying. Resistance would be back at the 52 area. So again, support down at 45, 46. So resistance up here at the 52 area. If you wanted to buy it, probably dip down to our pivot area initially was probably the best place. Now it's kind of hard to say you should buy it up here. I'd probably look for a dip down to the, if you want to get in and get long, 45, 46 area, or yeah, that's probably wait for that, or look for the resistance area at 52. All right, there, Paul. Happens. Everybody trades the markets that they feel comfortable trading. Totally understand. I understand. Gotta feel comfortable doing what you're doing. That's for sure. You are definitely, yeah, you're an old schooler. Yeah, like the beans in the teens, right? Do we have any special software or products to find these levels? No. Um, we use all the work that we do is taught, and we use just the charts. So we use C plus maybe some. To when you hit these new levels up here, maybe some Fibonacci's or trend lines, but most of the work that we do is not with special software. It's the work that we have, the technical analysis that we teach. Yes, we should have been in a great bed. Those guys were a breed of their own. I was in the bond pit. We were a breed of our own too, but we were the younger whippersnappers. You saw the grain traders were the older guys, and they looked at us bond guys or bond traders as who are these young guys going nuts. Now, now what's happening? Then I had to move over to trading equities because they trade well technically as opposed to. Well, I used to trade the bonds on the screen when they first started going, but then ever since 2007, when the government decided to dip their toe into the bond market, and they're still dipping their toe and they're dipping their bodies now into the bond market, it becomes more a government bond literally that they can manipulate. So it's a lot, it just doesn't trade well technically anymore. So we trade in S&Ps because at least they trade well technically. They give you opportunities. There's some ebbs and flows. It's not one-way trade. And we put together a methodology that allows us to find these little areas of trading opportunity for us. And like I said, if we can find 4 to 5 trades in the course of a day, average, I think we're okay. I think we can, and average, that's what we probably have. But lately, it's been a lot less because the markets have been not, when every time markets rally, they just pull the volatility out of them. I don't know why. It's just been like that every time. But as long as we understand it, expect it, so we have to just be patient and wait. When the markets were trading like crazy, we had like 7-8 trades in the first half hour sometimes. It was like really moving around. Not anymore. Now we're just listening to me talk more. Not a good thing. As much as I hate talking. All right, again, the market is inching its way up here. Support would be, like I said, around 45, 46 area. I mean, you could buy it up here, but you could also sell off here a little bit too. And definitely kind of a little bit of a flagging thing. So you could have made a case for buying it up here, looking for the 52 area as we move ourselves up here a little bit. Well, I mean, there's it's hard to tell, what people are doing on the market simply because the way they enter trades could be, manipulated. Like somebody might want to sell a 10,000 lot or a 5,000 lot at a certain price, but he's only going to show you 100 lots at a time or 500 or 400 at a time, because every time they'll tell the computer every time it gets down to 100, show another 300. So how are you able to tell what the order flow is? We look at it simply as looking what's actually traded and getting a good indication of where the market is at that point and how much is actually traded at each specific price. And you don't need any special software for that. As we're coming up here, going to test this 52 area. Again, keep your stops in there. These are all highs, right, that never been up to before, so you never know how they're going to react, or they're going to follow through or not. We're trying to buy it down at the 46 area, and bonds making new highs at the same time, so all these things do come into play. Again, just no matter what, keep your stop in there, because And this is what, like I said, you make new highs, anything can happen. And that's what's happening right now. And just keep your stop in there. If it's 2 or 3 points, whatever it is, keep your stop in there and then look for the next opportunity. If you happen to get long from the um, anywhere down below, we talked about 46, 45. We talked about the 41. Also, we talked about the flagging up here and getting long around the 50 area. All those were possibilities, but all of those are also possibilities depending on your risk tolerance. All right, market continues to uptick here. Can't keep your stop in no matter what. Always tell you that because that's what happens when you make these all-time new highs. And there were places to get in long if you wanted to. Again, we were flagging up there, so that's why we suggested that a little bit, only because he saw what was going on. And then next level of resistance, again, remember, you're making new highs, so these levels are all subjective based on, like I said, Fibonacci's or trend lines. So none of these things are etched in gold, and that's why you keep your stop in there. Perfect, because that's what you got to keep your stop in there. You don't get killed on these all-time high moves. All right. Support would be back around, like it's still at around the 45, 46. If you're a little aggressive, maybe, I guess maybe the 49 area. If you are short from here, that's where I would cover them. I'd support down 45, 46. See what it wants to do down there. Bonds rallying. Bonds definitely, I think, are contributing to this rally here. You can say the flip side to it now that there's less inflation fears because there are some great numbers that came out today. It totally doesn't make any sense, but bonds are definitely, I think, carrying us a little bit to these new highs here. As much as I don't understand the logic there, again, you can maybe correlate it, I said, the same way as we were breaking before because they were afraid of interest rates going up. Now we're moving the same way as bonds. It doesn't make any sense, but that is what's going on right now. Bonds are up to new highs here and 158 handle. We were forever at the 156 handle. And we talked about that all the time. But now we're definitely trading with bonds when they make a big move. This rally, I mean, I understand this. And low interest rates, yeah, everything's hunky dory. The economy's maybe turning around, good numbers. I can see all of that. I mean, you can understand why we're making new highs, but on market though, rally, I don't know. That one, again, we try not to figure out what's going on. That's all I can say. Yeah, I mean, it could be a yield. I mean, definitely the yield curve play is definitely involved here. That's for sure. But I mean, yeah, I mean, tens are up half a point. We're up a point. Yeah, maybe a little bit of a yield curve squeeze. Um, yeah, maybe. Again, fundamentally, it doesn't make any sense. That's all I can say. It doesn't make a yield curve or no yield curve. It doesn't make any sense. I mean, that's the excuse everybody gives. Oh, it's a yield curve thing. Oh, okay, what was happening before? when we were breaking and the S&Ps were breaking, yield curve was expanding. Okay, it is a freak show, definitely, absolutely. Slowly rotating back down here a little bit. Got up to 56 and change up there. Coming back down here a little, not much. Obviously, they like the rotation up here. Bonds on their highs, keeping, I think, the market kind of strongish. The best part about all of this stuff is like having these like talking heads try to make sense out of everything, and then they come up with their own like theory as to why something's happening when they have no idea. That's all I'll tell you. I'll tell you, they have no idea. Be right back with that question, Matt. Just give me 1 second.
Hey, quick shout out to Kurt H. Hey, Kurt, welcome to the family. Thanks for signing up for Sol's Friends and Family. I just saw that come through. Anybody else that's been here for a little bit, make sure you sign up today for Friends and Family so you can come back in again tomorrow. Got to watch out for that bot. The AI is taking over. To Kurt H. Hey, Kurt, welcome to the family. Matt, I think we're looking for you today. Who else do we got here? Donald B. Paris. Kurt, thank you. Lee W. Matt L. Paul K. Group, I know what you're up to. Thank you. Hey, Kurt, I appreciate you, signing up. Welcome to the family. If you have any questions, so I'll be glad to answer them. If you have any questions for me, don't hesitate. If you need help setting something up, let us know. Now, Kurt, there's like a tiered system here, right? You signed up for Sol's, what you've been doing, right? You're here for Sol's daily Zoom trade along. The class is an opportunity we can talk about, which is to join Sol in class, his intensive. That's when he takes you under his wing and he teaches you this methodology and then teaches you how to set his levels. Is it Gervin? Am I pronouncing that correctly? Gervin, thank you for being part of the family. I think I did reach out to you before, but if I missed it, apologies. And Kurt, if you want to have that private trader consultation about where you are in your trading, where you'd like to be, and you're interested in hearing more about Sol's intensive, and I guess you should know that, the stepping stone from guests to friends and family, the third stone in that is the opportunity to talk about and be part of Sol's class. And we can do that. Just post your best telephone number, preferably a cell phone. Donald B., let me know how you're making out. Lee W., Matt L., Paul K., hey, Peter O. I know Sol's having a class today. At least that's what I've heard. Hey, Casey, I saw you slip in there. Harris, I think you're due, right? Anyway, so I'll send it out to everybody while Sol's in the background. Remember, the bot is paying attention. Sometimes I have to rescue people. I don't want to have to do that. It might take me some time. And how many rescues do we get, right? The bot can be very challenging. We had somebody the other day get caught in that. I'm going to send this out now to everybody so that you can come in again tomorrow and then next week and then the week after until you decide to make a change. Now that's out to everybody. It should come out in chat. It's everybody's chat. We appreciate you being here. And Sol should be back shortly.
All right. Matt, to answer your question. Robots. Well, I don't know how the robots affect the market. Or maybe you mean well, the Fed. Look again. First of all, we don't trade the Fed day. We don't like trading Fed days because everything goes wackadoodle on Fed days. There's nothing that makes sense on Fed days. So anytime there's a release of federal, when they have the FOMC stuff, we are not. Anytime there's a Fed day, we call it an F day for a reason. So we do not trade F days because we could easily get F'd. So we stay away from trading F days for a reason, because there's no levels that matter at that point. It's just crazy volatility. So we have a thing about that. And as far as your robots, I think what you meant is probably the high frequency trades that occur, HFTs, maybe some of the other computerized trades that occur when markets go a little bit crazy. When things are really nuts, we expand our levels. Okay. Now, obviously, things are a lot slower. The levels are a little bit closer. And so things are a little bit tighter. When things get a little bit crazier and there's more volatility, we definitely expand our levels. And our levels, I think, work well with those kind of situations because they kind of drive those computerized trades kind of doing the same thing, but they also drive it to support levels. And there's other computer programs that find those support levels too, not only us, or resistance levels. And so they work, I think, well with that part of it for the most part. We have to be careful, though. We also talk about decreasing your size when that kind of situation happens. You have to trade differently when there's more volatility. One aspect is that our levels are spread further apart. Another aspect is that you trade a little bit smaller so you can absorb the volatility that comes into the market. All these things are aspects that we talk about in our education course, is how to control that aspect of the market trade when that happens. So it's just not. We don't expect the markets to trade like this all the time. That's what I'm trying to say, I guess. Kurt, we do have our class later on this afternoon. And speaking of our class, we use our class is done like at 12 o'clock or 1 o'clock Chicago time, where we use live charts to explain the concepts and ideas that we teach. We show you how to figure out those levels or any other setups that we have based on live charts. I can find the perfect situation every time using made-up charts that I know I can find charts that work for our purpose, but I don't do that. I like to use live charts to explain the concepts and ideas. That way, nobody can say that I'm not trading, because I'm in there. I'm in the game with you guys, because it's what I do here. It's what I've been doing forever. So, so we use live charts to show you what's going on, so that and sometimes when we're busy, we can show a lot of ideas and concepts. When it's slower, we can focus on more psychological aspects of trading, mental aspects, how you enter trades, how you get out of them, different ways of dealing with different market volatility. All that stuff is done in this room, in the Zoom room. And so it makes it easier. And, somebody asked about why they're not talking. We don't allow people to talk only because it'd become a mess at that point if everybody's talking. So you have me talking, and then Brad shows up every now and then and says a couple things for you. Now, the class is a one-time charge, and it encompasses working with me on an individualized basis. I get to know you a little bit. I get to try to see what your risk tolerances are, and work with you to maximize our trading with your risk tolerance, so that you can maximize profit. So it's more personalized than anything, and it lasts about, over time. It's not one time. It's not one class. It's until you kind of are comfortable with figuring out the levels, figuring out what we're doing, um, you know, figuring out how you enter your trades, uh, figuring out how you get out of them. And there's always going to be moments where we all go through bad streaks where you need a little pep talk, like, happens. So it's a continuation thing. It's just not a one-time thing. The price is a one-time thing. It's not a bad idea. Charge people. I should charge people. It's a good idea. Maybe I should do that. Charge people for longer. Yeah. Just joking. If you give us your contact information, Brad, the other guy, can give you a call and give you some more information on it. If you just put your telephone number, only Brad and I can see it. So if you put your contact information in there, we can give you a call and see if any of this stuff interests you. But you also get the trading room here, which is me in the morning. And we focus more on the morning hours because we feel that that's good opportunity to trade, good ebbs and flows. Late afternoon trade becomes a little bit more sticky and a little bit more less volatility, a little bit more one-way trade. And so we try to focus more on the morning hours to give us the opportunities for us to trade. And always remember, there's always tomorrow, right? There's always tomorrow. So if we're having a bad morning or whatever, there's always tomorrow. All right. I'm always nice. What are you talking about? Goldman said not to short the dollar. It's gone down ever since. What a surprise. Oh, in that case, you're right. All of a sudden, you can hear me. Amazing. Amazing. When I don't want you to hear me, you can hear me. That's amazing. When I want you to hear me, you're like, keep talking, and I'm trying to cut you off, and all of a sudden now you can hear me. Amazing. Big brother. Yeah. Okay. All right, we're just kind of stuck here. Yeah. We're stuck here on these highs-ish sort of bonds. And pretty amazing how we are rallying with the bond market and we're breaking with the bond market. It's supposed to be the other way around. But then again, what's supposed to be is supposed to be. And look, we don't talk all day here because I just am not a talking person. Believe it or not, I don't talk that much. I only here. Unfortunately, we focus more on the money. Like if you have other stuff to do, like we have a lot of, I have a doctor who's got a class later. He's been busy lately. We have our class later, and hopefully he makes it to our class later this afternoon. But if you have other businesses, I have a lot of people who have other businesses, so you can focus more on the morning hours, do your gig in the afternoon, or go play golf in the afternoon, whatever floats your boat. this does give you the ability to do that. Well, that's why I started the room. Actually, when I first got off the floor, I was trading in my office, and it was really bad. I mean, I was like, you get off the floor where you get a gazillion people standing around, especially if you're, I was trading in the bond pit, which had it probably in its heyday 600 people in there, and towards the end still had a couple hundred people in there, but. And I go up to my office and I'm like, oh, this is so boring up here. I mean, you can only listen to CNBC so much, right? And so I was like, okay, I got it. So that's why I started this trading room. I had a few people in there already, and I'd rather listen to myself talk than listen to those CNBC people chit chat and tell you what stocks to buy and what stocks, and then tell you why the market's going down after the market's gone down. They don't tell you about it before the market goes down. Okay, not that I expect them to, but they always had a reason why the market went up or down after the fact. Like, I can make up my own reasons too. I mean, I did not make up the reason about the Coinbase thing. I did not. That was what I read, and I can believe it because it broke a whole bunch. But why would it affect us? No idea. But it was a good reason at the time, so they all made up a reason. Well, I bought it. Made sense at the time. It's the only thing that was going down. Everything else was still hanging in there. And besides that, there's a lot of stuff that people say that I'll only repeat it if I agree or think it's cool. Otherwise, some of the nasty stuff that people say to me, I just kind of stay out of it. Neither will I there, Paul. I have no idea. I can't. We've talked about this yesterday when this Coinbase, this coin stock was out. I don't understand the crypto thing. I don't get it. But then again, I did not understand Google when it came out with its stock. Okay, I will plead the idiotic card on that one. So this might be another Google thing. I don't know. I'm definitely not smart. When Google came out, I had no idea. Like, what is Google? I mean, how is this company going to be making money? Okay. Who knew? Right. So I just did not understand it. I couldn't buy a stock that I didn't understand. Again, that's how old I am. I'm a stupid idiot, not understanding that you can buy all this advertisement and people actually buy it. Anyway, that's another story. But yeah. So yeah, I don't. Bitcoin thing is really beyond my comprehension. It's a young man's game, and the young are into, they believe in that stuff and just they go with it. I just need something to back it up. I don't understand what backs it up, and that's the part. I guess that's what I don't know. Okay, so they say you can buy a car with it, you can buy whatever with it, right? You can buy a house with it. But let's say you buy a house or a car with it, as bonds make new highs and we continue to make new highs. Little resistance against the 58. Again, remember, these resistance are very subjective because they're all-time highs. So take them with a grain of salt. Don't sit there and love these levels. I'll be the first one to tell you that, right? That's just the nature of the beast. If you're going to trade it, understand what you're getting into. Trade it very thinly and small. don't overextend yourself at these all-time highs. If you tried to get long, again, 46 area was my level of wanting to get in. Never got down there. Held the 52, believe it or not. Anyway, so we're up here again. So just trade them small. Just remember that. You don't have to trade them big numbers. Just small amount, and maybe we get a little bit of a rotation and make a little bit of money. These are not the ones that you're like throwing a whole bunch of contracts at. These upper levels up here. You just get a little bit of action here. Again, the 58 level is being triggered right now, so we'll see what it wants to do. And just trade it small, and that way you don't get hurt, and maybe you make a little bit of money. If not, it's all right. At some point, it'll start going down, and we'll make money then. It's hard to get along. I mean, it's really tough to get along. You'd have to really just, like I said, I was trying to find it earlier as our pivot, maybe 45, 46. We never got down there, and now we're continues to uptick here a little bit. So let's say, going back to this Bitcoin thing, is if you're going to be working this area, just work it, see what you can get out of it. If not, just leave it. I was going to say, so yeah, let's say you buy a car with Bitcoin and spend, I don't know, 50 grand. And the next day, the Bitcoin market goes down 10%. I mean, how many times are people going to get hurt like that, right? Before they say, okay, I'm not going to take Bitcoin for a car. But people are paying hundreds of thousands, millions of dollars with Bitcoin. So I don't know. I just don't get it. But how many times are people going to, take a big hit with something, and then the next day it's down? Let's say, it's a commodity, for heaven's sakes. It's not like, obviously dollar moves up and down, but the dollar doesn't move up and down in 10% increments overnight. So I don't know. I'm lost. But then again, I'm not going to worry about it, because I'll just stick to hard cash. Cash is king in my book. Look at the bonds. We're rallying with the bonds. It's just amazing. Amazing to me. Bonds strong. We keep going up with it. So, okay, you're working the 58 area. You're right here. You can decide what you want to do. It's only been up here for about 5 minutes, so working it. Bonds, everything's helping. Bonds are helping everything. Who knew? Who knew that bonds were going to help everything today? Helping gold, helping bond, S&Ps. Probably the bank stocks are up. Who knows? Everybody's happy. The Fed is in control. That's an understatement. Again, if you don't like the way it's trading, it's giving you a chance to scratch the trade. If you don't like it, if you've been up here for a bit, you don't like how it's trading, it's not giving you a rotation, you can always get out for a scratch. At least this one, it's giving you a scratch. The last one didn't. So it's up to you as a trader. We talk about how long you should be in a trade, what you should be looking for when it's up there. So all of these things are, your decisions are your part of your trading. That's what we're wanting you to make decisions on your own, not so much what I would do or what Don would do or what anybody else would do. It's what you as an individual trader would do. In rally markets, I have to tell you, rally markets don't do us too much good. Okay, I'll be the first one to tell you that when markets go up and they don't trade well for traders. Traders like markets when they go down. Be honest with you. We always when we were standing in the pit, You wanted markets to go down. Rally markets were tough to trade. So if you're watching bonds and you have a position here, you don't like it because bonds are making new highs, you have a chance to get out, right? Since we're looking at bonds today. So keep that in mind if you're trading. So like I said, rally markets are very tough to trade. No, the trendy, that's great. I mean, there's nothing wrong with that. If that's, everybody's different here. That's why traders are different. There's different breed. There's not one trader that's the same. What I like, you don't like. What you like, I don't. Maybe I'm not. It's not like I don't like trendy markets. I just don't trade them well. I won't. I don't get out of. I get out too soon. Stuff like that. But it's all right. I mean, I also try to find a place to buy them. Like today, it just never got down to my level, the secondary level. Not the. I bought the 41s before, but got out of those too soon, as you could tell. Yes, bonds right now do trend. That's their gig. That's why, to me, they don't trend. They don't trade well because it's just a one-way market there. Right? Bonds making continue. They just don't. There's no ebbs and flows there. It's just one way. It's hard to trade as a trader. Unless you buy them and hold, or sell and hold, and go back 6 hours later and see what's going on. Okay, like I said, bonds making new highs. The market's here at the 58, is obviously a little bit of here. If you wanted to get out, it's giving you a chance to get out. If not, it's your choice as a trader. Right now, we're just working as 58 if you're still in it, and you can either take a little bit of profit. You can see if it's going to rotate down. It's whatever you choose to do as a trader. But I'm just giving you reasons, one after the other, why you should stay in, why you should get out. I don't know. It's up to you as an individual trader to make that decision. That's all I'm saying. And no decision's wrong at this point. If you decide to get out because you see bonds are holding and making new highs, or if you want to stay in the trade, or you want to keep your stop in, those are all independent decisions that you have to make. And there's not one wrong decision here. So keep that in mind. All right. Good job. See, that would be good for you since you like to position trade. Just get yourself some call or put options and just hang loose with them for a bit. Whatever options, bond options, S&P options, whatever they are. If you're working this 58 area, we're being very patient with it. I would say above 60, you want to be out of any shorts. So that would be definitely a exit strategy. For sure, I would definitely keep a 60 stop if you're short here at the 58 area. See if we can rotate down. I would say, let's just hope we get 2 points and be happy with it, because this is put me to sleep right now. It's trying. Well, we got 2 points here from our top end, so that's a good thing. It's trying. It's being nice to us a little bit. If you were very patient, very, very patient, getting a little bit of rotation here. we're getting a nice little rotation there against our 58 level. Nice little quick, it wasn't quick. It had to be patient, but we're getting a nice rotation here against that 58 area. If you kind of hung there a little bit, he gave you your exit strategies. So that was good. Now, if you take some profits, and then if you want to try to keep it to, if you have any extra contracts, then you can maybe try to get it down to the 50. I would cover the rest of the 52, 54 area if we can get down there. That's if you have any extra contracts. You definitely have to take some profits, and then hopefully we can get a little bit of a break, a little bit lower, and cover down at 54 to 52 area. That would be very, very nice. Make up for that 46 that didn't work out too well. It's trying. It's taking its time, but it is trying to get down there. Anyway, you definitely got 2 points on it. Hopefully you maybe get a little bit more if you have extra contracts, like I said. And everybody trades different. If you're just trading on one lot, that's fine. Take some profits. Nothing wrong with that. You know what they say, you can't go broke taking profits, right? All right, so nice little, you had to be a little bit patient there, but again, if you did, it's paying you off here. It's taking its sweet old time. Again, hopefully you covered some, and then maybe if you have extra, you're looking at, I'm looking at 54 and cover the rest there, and kind of be happy with it. Well, good support would be around the 52 area. 50, 52, anywhere in their range. All right, so we've had a few. We've had we've had like 5 trades today. I'd say easily. I think we could account for 5 trades, and well, one of them was bad, depending on how you got in or how you got out. But oh yeah, good to know, Mark. Good to know. Yeah, it was. This is a little goofy there, but hopefully, I know you would stick with it. My job is to make you happy. I'm glad you're happy now. Glad. That's the only reason I'm here, is just to make you happy. One customer's happy. All right, as we trek down here to 54, and this is where probably I would cover if I was me. Oh, too happy. HD. HD is a happy customer too. Good to know. Oh, well, glad. I don't know if I had anything to do with that there, Paul, but glad you're happy also. Oh, oh, come on. That's very sweet there, Maureen. That's hope that changes for you. And how could that feel sometimes? It has its moments there, Paul. Trying to keep them at an even keel is the most important thing. Can't get too high when you're making money, and you can't get too low when you're having a bad streak. You got to try to keep them at an even keel. That's the hard part. I get it. All right, getting this nice rotation here to 54 area. So they hung in there with it. They had a nice little stop. The way the market double topped up there, so it gave you a nice 2-point stop. Just had to deal with it for just a little bit. Once you got through there, it was good. And good. I'm glad. Nice to hear. Thank you. All right. Well, nice rotation here off of the 58 area that we were shorting. And nice pushback down here. The market seems to, again, probably have some support around the 52 area. If we get below 48, I think we could probably maybe rotate back down to the 45 to 46 area, which became that original buy area. But anyway, right now it is gave us a nice little turn off of the 58 level that we had. And again, 52 maybe, a little support if we come down there a little bit. But that's if you want to buy them. But keep your stop in there because, these are all-time highs, right? And it doesn't take much for the market for everybody to jump on the bandwagon and say, oh, we got to take some profits at some point. So that could happen with any kind of news that comes out, including the coin thing. Who knew that yesterday was going to create some volatility to the downside because coin was breaking, for heaven's sakes? A new IPO, right? Crazy stuff. Even though that IPO got valuation of more than Fidelity did in one day, a coin thing that has no intrinsic value whatsoever. I don't know. I'm lost with this coin thing, but not for me to understand. I'll just stick to what I understand. Maybe that's a wrong thing, but hey, at least I understand it. All right. Just kind of hang in here. Just as a reminder, quick reminder that we're going to be having a class in this venue later on this afternoon at around 12 Chicago time, so in about an hour and a half time. And for those of us who are part of the course, you can obviously more than welcome to stay. And for those of you who are not joined the education part, kindly exit, and you're more than welcome to come back in about an hour after that. So we will have our class later on in about an hour and a half, and then from there we will do our class. And then anybody who is not part of the course and you want to come back in the room, we'll have the charts up, and you can obviously join us back tomorrow too. If you're not in the room, if you don't want to get back in the room later on. So just as a reminder, and right now we'll take a little bit of a break, and we had a nice rotation there off of our 58 area, a little support right in this level here, 50 to 52. And if you want to dip your toe and buy them, that'd probably be the place where we're looking for a little support. Otherwise, and if you want to cover some shorts against the 58 area, that was a nice little trade there, and that's where we're at. Okay, so take a little bit of a break. We'll catch everybody back at around their education class time.